The housing market, it's going out of control. That's the topic for today's episode. And without further ado, let's dive in. Hello, everyone, and welcome back to another episode at NOVARISE Invest. If this is your first time tuning into this channel, this is your channel for real estate education. So it's that time of the month again where you get to sit back, go over everything that has been going on in the markets, and decide what you get to do going forward at the beginning of this month. So we're on May 1st right now, and what we're going to do is to go over everything that has been going on in the month of April and what does it mean for you when it comes to your real estate investment. So without further ado, let's just go straight into my screen and go over what I've had prepared for you today. Okay, so first up right here, we have this very first article about the housing market going crazy. So let's just quickly do a zoom in just to make it easier for you to read on the screen, regardless of whether you're watching from your computer or your phone. And so, yeah, the title is pretty self-explanatory. The housing market, it's going crazy that it has been since 2006. So what does it mean for you? We all know that the houses are getting way too expensive, that people are bidding, everything there is on the table just to get access to their dream home, right? So in essence, what this article does is just simply corroborate what we've been talking about over the past few days, right? So here's the scenario right here. Less than a day after real estate agent Andrea White listed a 3-bedroom home for sale in Sacramento, California, she received an all-cash offer. But wait, that's not the part that makes it outrageous, because cash offers do happen all the time. What's amazing is that this cash offer came in $21,000 above the asking price. That's unseen of. You never get to see something like this. Usually, if you have cash on hand and you walk into the equation to negotiate, you typically have more leverage to get a lower pricing just because of the fact that you're carrying cash with you and you can facilitate, fast closing and stuff like that. But no, we are at a stage where what seemed to be normal or what used to be expected is no longer happening anymore. So yes, $21,000 above the asking price. That's what they offer on a cash deal. And the deal doesn't end there. What became even more painful wasn't the fact that the realtor is actually, making a good commission and selling everything, in less than a day, right? Because now inventory is flying, like literally. How can I explain this? I've been monitoring the market myself just to see if maybe I get lucky and find any good deals out there. And literally, by the time I get the newsletter, let's say I get it at 7 a.m., by the time I get to it around 9:30, the listing is already gone. Like someone has already snatched it. Somebody has already presented their pre-approval letter. It's no longer gone. I don't even get to check it. Like I see the picture, I like what I see, and then the minute I click on it, all I get is a sad notification saying that, hey, this listing is no longer available. Well, what are you gonna do, right? So that scenario, it's happening right now. Houses are flying off the market in less than a day. And while it's nice for the seller, it's actually very heartbroken for the buyers because they're saving up throughout the whole life. Some of them managed to save up a lot of money during 2020 with the dreams, with the hope that they can get access to their dream home. And now they're getting outbid by other people offering above asking price. And even if you were that family who is willingly want to offer above the asking price, sometimes you're capped by the bank. Sometimes you're capped by the amount that the pre-approval letter is stating in writing. So sadly, you do get outbid. And one way or the other, you will think that this scenario will make the realtor's life easier, but sadly, it is not. If you can take a look at here, the easy part was for the realtor to sell the house. What was difficult for Ms. White to do is to call all 17 other agents who had already scheduled tours of the house and let them know that the house was no longer available in the market. And as you're scrolling down through this article, you're going to start noticing a couple of trends that are going to be key for the rest of our analysis, right? So as you're scrolling down, we all know that we've been getting the hottest activity for the past 14 years, right? And the things don't end there. Let me see if I can find something. I was reading it. Okay, here. So we're hitting that stage and where millions of millennials are entering their early 30s. So that means that more and more younger generation are hitting that stage in their early 30s, which is typically when they're ready to buy a home, right? So we're getting all this new generation getting already saving up their money, entering the market, and they're getting outbid all the time, which can be very heartbreaking for them. And one way or the other, destroys their dream of becoming a first-time home buyer. So yes, it's great for those people who have the cash readily available, like this example right here. But now we're seeing a scenario in where there's not enough houses in the market. And then typically the ones that get outbid all the time are the people who are entering the housing market for the first-time home buyers who are getting squeezed out of the competition just because of the fact that because they're first-time home buyers, they typically either don't have all the down payment readily available. Maybe they're using down payment assistance programs like any type of FHA loan or any type of government-backed mortgages. And so competition is getting fierce. And then eventually it will let you think, well, if these families, these young families are getting outbid, what does it mean for them? Like, where are they eventually going to end up? And that's something we're going to cover just in a little bit further down this analysis. So as you scroll down, there are some of the things that I really want you to pay attention to over here. And mark my words, remember this, because we're going to come back to this in a little while. So supply, like I said, it's growing tighter and tighter. And that also has to do with the fact that home constructions, they plummeted during the 2007 and 2009 recession. And supply remained low over the next couple of years. Well, actually the next decade, because, I don't want to give you the spoiler. Eventually, we're going to get to it later. But remember this part, right? So this, the fact that construction actually slowed down over the past 10 years, it's having big repercussions nowadays and the situation that we're facing right now with the housing market. And then in addition to that, you have existing homeowners who are refusing to leave their homes. They're refusing to sell because they're already aware of the current situation. Hey, if I do sell this house, I might wind up being homeless because what if I get outbid by the time I'm looking for that next home? So now we're getting hit from both sides because now we don't have enough housing available because home constructions have slowed down. And in addition to that, we are dealing with the lack of supply from existing houses in the market just because current homeowners are so afraid to sell because they don't want to be left off on the street, right? Now, somewhere down this article, they call out that eventually once the home builders are increasing their volume of constructions and supplies in the market, some of these crazy prices in the housing market might start to slow down. But then I think we're dealing with a question of when and how soon, right? So this is really important. Keep this article in consideration. You should definitely check it out because this will kind of like set the tone for the next couple of articles that we're about to analyze, right? So the housing market is crazy. That does not mean there's no opportunities out there. You just have to embrace it and prepare yourself and just be aware of what's going on. So that way you can either prepare yourself to be ready to jump in when the timing is right, or just simply adjust and see what is it that you can offer to the current demand, to the current buyers that other people or other investors are not already offering, right? So now next, what we have is this article that just simply corroborates that housing prices are continuing to increase and they're going up like crazy. And in fact, housing prices or home price growth, it has accelerated to a new 15-year high, right? So we're talking about over the past 15 years, today, right now, in 2021, we are already seeing the highest prices possible available in the market. And it doesn't seem to slow down. People continue to engage in bidding wars because of the short supply of housing available in the market. We are already hitting a record low of supplies, but then at the same time, we're hitting a record high in prices. And this article right here just simply corroborates it. It proves it, right? For those who were a little skeptical and not believing that we are in a short supply, look at this article right here. The U.S. housing market is nearly 4 million homes short of buyer demand. Okay, we're talking about 4 million houses short, meaning people are waiting for new homes to hit in the market, and the market it's behind by 4 million homes. That means you are either going to have to wait for a long time, or you're just simply going to have to outbid everybody, assuming you have that capability. Good luck with that. I don't recommend it because that's just simply a recipe for failure, right? If you go ahead and you overpay for a house that is not worth it, eventually when the market corrects itself, you are going to be facing with a situation very similar to back in 2008 and 2009, where you're actually paying a lot more for a house that is not worth it. So be careful with that. Once again, don't let the emotions take over. Don't let the emotions take control over you. What's the worst case scenario that can happen if you get to outbid, or maybe you hit your senses and you refuse to overpay for a house that might not be worth it? Well, one, you can move back with your parents, or two, you can just simply go back and rent, right? It's not the end of the world as long as you have a roof over your head, right? But that's just my opinion. You don't have to agree with me, but I'm just sharing different ways to view the scenario and help you realize that even though the market it's crazy, things are not as bad, because at least there's still supplies of homes available. Maybe not for buy, but there's still housing available for you to live in, right? It's just a matter of like shifting that perception. So now what we're going to do, we're going to continue to scroll down this article, because a lot of the content that it's in here, it's going to be, well, actually was called out in this first article right here about the housing market going crazy. So our first step is this paragraph right here, right? The figures underscore the severity of the housing deficit, which is a major factor fueling the current red hot housing market. The shortage is especially acute for entry-level homes, which makes it more expensive for first-time home buyers to enter the market. Once again, when you're a first-time home buyer, what's happening? You're scrambling to save all you've got. Some of you might have even gotten a gift from your parents just so you can get everything possible and package your paperwork in a way that is presentable to the bank to finally get that pre-approval letter. You hit the market and all of a sudden you get outbid by, situations where, let's say here, where a buyer comes in with an all cash deal and then you get outbid. It's kind of like heartbreaking, right? So buying a home is already very cumbersome in itself. Imagine getting yourself outbid and getting a reality splash into your face, making you feel that, hey, maybe this home ownership may or may not be available for me, right? But hang in there. All you got to do is just to be patient, just continue looking, and eventually you will find a house that could meet your needs. But again, don't let emotions take over your decision-making process. Now, back to the article. Let's just continue to scroll down. Remember where I talked about the home building activity slowing down? Okay, so this article calls it out again, and it's very important. Home building activity has been subdued since the 2007 and 2009 recession, when many builders went out of business. Now you got an actual explanation as to why home construction started slowing down, because a lot of these companies, a lot of these people actually went out of business when the crisis hit, right? And while builders have increased activities in the past, they have been hampered by the shortage of labor, materials, and development. Those who have been following me for quite some time, you do remember that in last month's analysis, I did talk about lumber being extremely expensive. And then if you are lucky, you might be able to get a hold of it. It's just very difficult to get a hold of construction materials without having to pay for the premium. So when you combine those two together, the shortage of materials and the fact that you have to wait a long time, it's only logical for the houses to be ridiculously expensive, because now you're paying extra for construction materials. And then at the same time, you're adding the time factor, which means there's more and more people holding off on the line, waiting on the line to, snatch those homes as soon as they hit the market, right? So now back to this article. There's something else that really caught my attention when I was first reading it, and it had to do with the pandemic, actually. Some of the current shortage stems from the pandemic-related moratorium on foreclosures, and investors who buy single-family homes to rent them out also have played a small part. What does it mean? So think about this way, right? I'm an investor. I come in and I buy a house, right? I got a good deal out of it. I got cheap money because, the interest rates are low and all that stuff. And then 6 months down the road, my tenant loses their job and I cannot evict them. So if you think about it, if you cannot evict it, you cannot sell the house because the tenant is not going to be willing to move. And the new buyer is going to be afraid to buy a house with the tenant. That's why if you happen to be an investor and you're trying to sell a property with the tenant in it to a home buyer, then you're going to have a hard time selling that property because no home buyer wants to deal with a tenant. And when I use the word home buyer, I'm talking about people or families who are looking to buy properties for them to reside in, for them to use it as a primary home. When I use the term investor, that's when I'm talking about people coming in and buying properties so that they can use it as part of their rental portfolio, right? So home buyers are very afraid to get a hold of properties that have a tenant in it because one, they don't want to be left homeless. They don't want to deal with a situation where you take over a property and you cannot even move in there because the tenant is refusing to move out, and the government and the court is not going to side with you because of this whole issue happening with the moratorium on the foreclosure. So although this situation plays a small role, it does impact the overall supply of housing available in the market. And then in addition to that, there was another thing, which I think it's pretty self-explanatory, but I just thought it was interesting to highlight it somewhere in here. Let me see if I can find it here. Typically housing demand declines and supplies increases during a recession, but the effect of the COVID pandemic is unusual. It has spurred housing demand because higher income households who are able to work from home now want more space. But then look at what is happening with the pandemic. Everybody's working from home. And if you come to think about it, that means courthouses and everyone else is also working from home. So if you are a builder and you're trying to get a permit, you might not get your permit within the usual week, 2, sometimes even 3 weeks, depending on where you are doing business. Now you're going to have to wait a long time before you can even get approved and get the permission that will allow you to start construction. So just think about all the hurdles that everyone has to jump through. It's not just for the home buyers or even for the investor who's trying to find a good deal. Everybody has been impacted with this whole situation with the pandemic, right? Now, moving along, not all is bad news. We do have some news when it comes to the housing market. And what better than this article to help me corroborate what I'm saying? So the pandemic has changed where Americans live, right? And I'm sure you've seen a lot of the migration. It's something that I've been talking about over the past couple of months. I'm going to leave the episodes down in the description below so you can actually check those out as well, just so that the content that I'm sharing with you today makes more sense for you, right? But for those who have been following me for quite some time, you know that traffic from big cities have been migrating out, meaning leaving the big cities into the more suburban areas. And that has created opportunities for areas where under regular circumstances, they would have never had the opportunity to grow, right? So once again, the pandemic changed where Americans live. Big cities lost residents, and as younger households left for the suburbs and older people accelerated their retirement when fewer newcomers came to take their places. So in essence, what this article is talking about, it's how we're starting to see a shift. So we're getting a lot of middle-class families to upper middle-class families moving out to the city since they have the opportunity to work from home. And therefore, that creates a demand for a bigger place for them to reside in, because it's not the same thing to live in a 2-bedroom apartment with your husband or wife in the living room, and then you are in the bedroom, and then your kids are also taking Zoom classes. It becomes a recipe for chaos, right? So more and more people are having demands for bigger spaces with playgrounds and outdoor areas, because of course, once your kids are out of school, what else are you gonna do with them, right? Like, you want to play, they want to take some fresh air. It's not good to be locked up in the house 24/7. So now there's more and more demand for areas with outdoor spaces, or at least having some type of proximity to public parks or any recreational areas that is outdoors. So usually when you're in big cities, the options become very limited. But then as you start going out to the suburban areas, you're getting more space. Your money gets you more real estate, meaning gets you more space. And in addition to that, if you can slam, outdoor areas with it, why not? Why not take it, right? So this dynamic is actually creating a very interesting scenario because now the suburban areas are getting the opportunity to grow, to attract talent, to attract businesses who are willing to create restaurants, coffee shops, additional movie theaters, right? And that, what does it create in the long run? Taxes, right? So business have to pay taxes, the resident have to pay taxes, and now you're creating revenue for these areas that otherwise they wouldn't have had the opportunity if it wasn't because of the pandemic. But then in the city, now we're seeing an outflux of all that revenue because the residents are leaving. So that means less taxes being collected. And because businesses are leaving for all these suburban areas, even bigger companies are considering the option of creating a small office space for those who would like to have the option of going into the office. Because remember, not everybody likes to work from home. Sometimes we do have some people who prefer the office space because they prefer to engage with their coworkers. Maybe they find it more productive to sit in a meeting room with all of your team and brainstorm ideas. And why not? Maybe people need that time apart from their family because they find that working with their family right next to them could become a little bit distracting. So now we're seeing all of that revenue from big cities going all the way out to smaller cities, and it will be interesting to see what's going to happen. There have been talks in New York about raising taxes on high income earners just so they can sort of like make up for the migration of all of those families, all of those businesses leaving the cities. But you know, time will tell. We'll see what happens in the long run. But this is basically the trend that is happening right now on some of the suburban areas. So if you're still looking for opportunities, hey, don't worry. You don't have to worry about this big, cities or these areas getting outbid. You can start exploring some other areas that might be the next up and coming neighborhood, that might be the next trending neighborhood that people haven't really exploited yet. And this could be your opportunity to get access to a housing that is more affordable for you as a first time home buyer, or even as a family who is just looking to upgrade in sizes. And why not? Even for you as a real estate investor who are looking to find the next great deal so you can either flip it or create a rental property for that next family to come in and reside in it. And so if you're looking for ideas as to where exactly to invest, or what are some of the areas that you might want to take into consideration, here. The suburbs of large metropolitan areas capture much of the outflow. The new suburban household from migration rose 43% in 2020 from the prior year, helping swell the counties surrounding Dallas, Indianapolis, Nashville, Tennessee, and Charlotte, North Carolina, amongst others. So smaller metro areas, including Salisbury, Colorado Springs, and Allentown, Pennsylvania, and Boise, Idaho, also experienced a sharp net increase in newcomers. So there you go. They're calling out some of the areas that you can potentially go in and explore and see, hey, maybe this will be my new home. Hey, maybe this will be my next area to build and expand my real estate portfolio. So definitely a great article for you to check out. And all the links will be made available for you down in the description box below, so you can further explore the different cities, right? Another article that just simply helps corroborate that what used to be the non so popular areas are not becoming the new thing, right? The new up and coming neighborhood where people are looking to migrate, and where there's more migration, there's more opportunities, there's more demand. So that means it will start attracting more and more companies, more small business to help revitalize or just build the new area from the ground up. So Lakeside, Idaho City is America's hottest housing market in New Wall Street Journal Realtor.com index. So basically what this article talks about is the reasons why a lot of residents are actually moving in. So the trend here seems to be capturing the idea of a city with a small town feel. And they're very particular about this area right here. Coeur d'Alene is the top metro area in the ranking, and then followed by Austin, Texas, Springfield, Ohio, Billings, Montana, Spokane, I think. Hopefully I'm not butchering the name. Washington. It's just some of the areas that are up and coming to life. So definitely a great article for you to check out if you're looking for ideas on areas and where to invest. And next up, let's talk about Apple. Apple is announcing a new $1 billion North Carolina campus and $80 billion additional U.S. spending. So the plan will create closely or some 3,000 new jobs. So once again, if you're looking for a new area to invest, try to look more into the plan that Apple has and creating more new jobs. And what happens when new jobs are created? That means more opportunities for you to provide housing, whether it's for rental or whether it's fix and flipping for a new home buyer. So a great article. I'm going to leave it here for you to check out. I'm not going to go over the details because otherwise this will be a 3-hour long episode, right? So now moving along, let's just talk about the contrast of what's going on, right? So here's the status update on U.S. foreclosure, right? So the Fed is actually prohibiting U.S. foreclosures until 2022. Wow, what does that mean for you? Well, it means that if you are dealing with a troubled tenant who is refusing to pay rent, you're going to have a hard time keeping up with the mortgage payment unless you have a lot of cash reserves available in your bank account to continue to meet those mortgage payments, or you're going to have to call the bank and sort of like renegotiate any type of forbearance payments that you might have. It's not ideal because once again, even though you're not making those mortgage payments right now, you are in essence accumulating more and more interest in the long run. And that means you're going to wind up paying for a mortgage of a much higher cost than you originally signed up for. But this is in essence the situation. What does it mean for you as a homeowner? It means that if you are in the market trying to get a hold of new housing, it just simply means that the supply might not be there yet because current owners cannot even put their properties out in the market because of the situation going on. They cannot evict the tenant, and if you cannot evict the tenant, that means you cannot sell the property. And or it could go the other way around. You can accelerate the foreclosure process. Well, not accelerated, but you might see a wave of foreclosure coming in 2022. So as long as the government keeps stepping in and extending the eviction moratorium, it could go either way, right? Either the current homeowner or the current investor might not be available to continue to keep up with the mortgage payments unless they get another extension with the bank on the mortgage payments. But, you know, eventually, even the banks are going to get tired of extending it, right? They need money as well. They need to create money, and you can only go so far with the extension. So just hold on tight, keep monitoring the market to see what happens. Again, if they continue to extend these moratoriums, there's going to be a point in time in where the banks are going to say enough is enough, and even the investor is going to say enough is enough. I cannot keep up with this, and that might be your opportunity to come in and grab a good deal, a good bargain on the housing. So the Consumer Financial Protection Bureau, CFPB, on Monday proposed banning foreclosures until 2022 as many families risk facing losing their homes as federal protections during the pandemic expire. So once again, this is just a proposal. It does not mean it's going to happen, but that's why you are watching episodes like this, and that's why we're going over the news, just to help you stay tuned, right? And just to show you a little bit of contrast, I know you might be thinking, well, it's a good thing that the Fed is doing this, or that the government is actually doing this to protect those families who are at risk, right? Who are at risk of being homeless, who are at risk of being on the street. We always have to look at both sides of the equations, right? Not everything is one-sided, and this article actually proves it. So I'm sure at this point, some of you might have already seen this article. Or not this article in particular, but the news. So in Riverside, California, there has been this incident in where this family actually purchased a home from, this homeowner. And so Tracy and Miles Aller spent more than $500,000 to buy this home in Riverside in January 2020. Now, more than a year later, they still have not been able to move in. So what happened here, right? So it turns out that the homeowner put the house on sale, and they went through the entire process, the inspection, the closing, and then within a few days they're about to move into the house, and they find out that they cannot move, right? Yes, you heard correctly. The homeowner, as you can see here, who sold them the house, refuses to move out. He texted, I'm not leaving, and he already barricaded himself in the house. So the couple have tried to evict the former homeowner because, of course, they are the new homeowners now. But the state eviction moratorium kicked in due to the pandemic soon after they filed the paperwork. So again, it's just sad to see that people milk the system, right? It's just the way it is. You're creating rules here to protect those families. Those families are really in need. Some tenants, they take advantage of the moratorium just so they don't have to pay rent. And that puts a strain on the landlord. And then maybe some of you are not feeling bad for the landlord, but believe me, there are repercussions to this, because the landlords, not only they have to be responsible for paying the mortgage, and you might probably be thinking, okay, whatever, that's the bank's problem, but the landlord is also paying for property taxes. The landlord, depending on the state where they are having their rental portfolio, they also have to pay for business taxes. So if there are no tax revenues, what does it mean for your town? That means you're going to get crappy roads. That means that the library is not going to be functioning the way you want it to function. Public parks are not going to be as taken care of as you would like it to be. So that means less playground for your children and for your family members. So everything has a ripple effect, and it's just not that simple. It's not just the issue of, well, that's a problem between the bank and the landlord, right? Like, it's everyone else's problem. Money has to circulate, and cities and small towns, they need to collect those taxes. And typically, the smaller the town, the more they rely on small business owners, and landlords are in fact small business owners, right? So now moving along, and now we have an article that shows you another contrast to this entire eviction situation, right? So Texas tells judges they can't ignore federal eviction ban. So some courts are beginning to approve evictions after state stops enforcing U.S. moratorium, confusing landlords and putting tenants at risk. And then as you scroll down on this article, we see apparently there are 3 states in particular where the eviction process is not so straightforward anymore, because everything is left up to the judge. So those states are Texas, Tennessee, Ohio, and eventually Florida as well. I read somewhere here wind up being thrown in the mix. So definitely check out this article, okay? So we're going to move over to this one right here. I review mortgages and I see 3 areas of possible trouble in the housing market. In fact, when I read this article, only 2 called out my attention, and those are the ones that I'm going to go over. So what's the first issue right here, right? So this is what you need to pay attention to. I know that back then in 2008 and 2009, we were in the middle of the Wild West, right? Because everyone was getting approved for mortgages. Every bank out there was issuing mortgages. And some of those mortgages were no docs mortgages. What does that mean? It means that they don't review any paperwork. You can just simply walk into a bank and say, hey, I make $1 million. And then the mortgage worker will be like, okay, fine. Let's just fill out this application and hope that you get approved. And 99% of the times you will get approved. So fast forward to 2021, we no longer see those products, but then we're faced with another hurdle. And that is the fact that we're getting a lot of demand for cheap money, right? So everybody, their uncles and their sisters and the mom and the dad and the brothers and sisters, they are all refinancing their home because they want to get access to the lowest interest rates because it is cheap money. And at the same time, we get people going like crazy because they're trying to become home buyers. They want to buy new properties, and that just simply increases the demand. So now we're seeing a situation and where we get mortgage underwriters who have typically less than 2 years of experience. That means banks are actually hiring people left and right just so they can put them in the underwriting department so they can help process the volume, the demand for mortgages. But it doesn't mean that these people are properly trained. So what they're starting seeing is that you are getting a lot of sloppy applications. Not everything is reviewed correctly. And that could create a big problem down the road because maybe you're not supposed to get approved for that mortgage. And what exactly does that mean? That means that the bank didn't review your case thoroughly. And that might be a recipe for disaster, because what if you truly couldn't afford that mortgage, but then you got approved anyways? So this is something definitely that you should be on the lookout for, because back in 2008, a lot of people who were not supposed to buy homes became homeowners. They didn't understand anything about finances. They didn't understand anything about budgeting. They didn't educate themselves. They just simply say, okay, I'm just going to buy this home. The bank is willing to lend me the money, so let it be it. They didn't know how to run the numbers. They didn't understand that, hey, maybe this mortgage is a little too expensive for me to afford, and maybe the rental income might not be enough to cover it. Or maybe you are getting enough rental income to cover the mortgage, but do you know what part of that money that you're paying toward the bank is going towards the principal, or what part of that money is actually going towards interest? You don't know that. So you really need to educate yourself. And there's a potential that something like this could happen, right? And then the second point that they're calling out is the fact that there are a lot of real estate investors applying for mortgages as a residential mortgage just so they could qualify for a better rate. But again, that is sloppy work from many angles. The underwriter who failed to truly realize that, hey, maybe this is in fact not a homeowner, but it's in fact a real estate investor. And then also at the same time, the investors can get on the hook because what happens if the bank finds out? Because they do audits from time to time. And then what if your mortgage happens to be one of those that were a sample? The bank has the right to actually reset the interest rates. And what if by the time they reset the interest rate, you are going to wind up with a rate a lot higher that you as an investor can afford, because maybe under the original rate, you were able to afford it because the rental income was enough to cover the mortgage payment. But what if they reset the rate and now the mortgage payment is a lot higher than your rental income, and you are going to wind up having to put money out of your pocket? Great if you can afford that, but what if you can't, right? So that's going to be eventually a foreclosure, and it's eventually going to lead to you losing your property. So a great point of view. You should definitely check this article out, the description. And once again, the link to this article will be placed in the description box down below. Now, moving along, but before we do that, if you're enjoying this analysis so far, do not forget to hit the like button right here at the bottom so you can help this episode rank and help others like you who are looking for information of this kind. And if you happen to know somebody, a friend or a family member who's looking for this type of information, feel free to share the love and send this episode their way so that they can take advantage of this information as well. So moving along to the next article, and this has to do with something that I table on this very first article before about the housing market going crazy, right? So remember what I said about, families, young families getting outbid, or even, families who have already bought and sold their old home to buy a new one getting outbid. Good news for those who actually own rentals, because apartment rents are rising again and there's no need for discounts or concessions anymore. So for those who are brand new to the channel, I was actually talking in prior episodes how in big cities or in some areas that are close to big cities, a lot of the landlords are having to provide concessions to the tenants because there's a lot of competition. There was a lot of supply on rental housing available and not enough customers looking to rent. So a lot of these landlords were offering concessions, a month free, or maybe, you sign the lease and I'll pay your cable for a full year. Or if you've signed the lease, I'll give you parking for free for the full year. You name it, whatever concession there is. So now, thanks to the COVID vaccine and then higher employment, people coming back to the cities looking to rent, now there's no need to offer those concessions anymore. And when you add to the equation the fact that people are getting outbid in their homes, not everybody is happy living with their parents. Not every married couple wants to live with their parents. So eventually they're going to have to make a decision and face, the reality and say, do I want to continue to live with my parents, or do I want to actually move back to the city or just rent out another property? So until, prices, they come back to normal or they come down, whatever you want to call it. And so that is creating more and more demand for rental housing. So if you are a landlord out there and you have rental housing available, good news for you. The word has passed, demand is coming back again, and you should be able to rent out your property sooner rather than later. So now let's just move on to the commercial side. We're done on the residential news. Let's just move on to the commercial news. So for those who are looking to get into the commercial news, we have industrial rents hitting record high. That has been a trend that has been happening for quite some time. So the industrial sector kicked in of the year with surge demand outspacing supply for the first time. And a lot of this has to do with the boom of the digital business, right? So we're getting more and more brick and mortar stores closing down because of COVID, or maybe reducing some of their foot volume. And then people have been forced to, do more online shopping. I'm sure you've seen on the news the growth of Amazon and all the other digital business out there. And the fact that there's an increase in demand for digital products or digital orders, that means there's going to need for more warehouses and more industrial areas to house all of those products so that they can house all of their merchandise and have it readily available to ship, unless you want to keep it in your apartment. But your apartment can only take so much, right? And then the next one. So it's funny that, on the residential side, whoever owns a rental property, it's going to do great because, like I said, the demands for rentals are coming back up. However, things seem to be the complete quite opposite on the office space. In fact, office landlords are offering now up to a year of free rent, just in hopes to, have these big companies come in and sign, a long-term lease with them in exchange of some perks. So if you are in the commercial space, this is a great article for you to check out. And now moving along on to the stock investing side, because I did promise you that I will start including more news about the stock market. And we're back to the topic of semiconductors. Now, in prior episodes, I've talked a lot about semiconductors and how they are in shortage and how that could impact or affect basically everything that's going on in the market. So for those who don't know, semiconductors are quite useful, not only on car makings, but also in pretty much every single electronic that you need, whether it's your phone or your TV. And because we live in an area where entertainment has been capped, live entertainment has been capped, a lot of us have been falling back on more HBO or Netflix or Hulu's. That means more and more demand for electronic devices. So what that has created is a shortage of supply, starting out with cars, but I wouldn't be surprised to see a shortage on TVs or computers just because of the lack of availability in semiconductors. Now, what does that have to do with you and the stock market or like any decision that you're about to make? Well, in prior episodes, particularly the one from last month, I did talk about some semiconductor stocks that you should definitely look into. AMD is one of them. NVIDIA, it's another one. So if you are still interested in it, don't forget to check the episode, which I'm going to leave the link down below so you can actually look into the different semiconductors available in the market that you can invest in, right? Now, moving along, we talked about Tesla. Tesla posts record net income of 438 million revenue, which means an increase by 74%. So if you're still considering buying the Tesla stock, now is your chance to do that. And if you find Tesla to be expensive, you can always consider investing in fractional shares in Tesla as long as you're, getting your hands on it. And next thing, we have Microsoft. Microsoft have actually posted strong growth in gaming, which means that the software giant, it's near a 2 trillion valuation. So if you're looking for another recommendation, another stock to invest in, Microsoft is actually a very strong buy. And once again, if you find the stock in itself to be a lot more than you can afford, always consider doing fractional shares. And if you're looking for recommendations for fractional shares, there will be a episode coming down within the next couple of weeks with recommendations of platforms that would allow you to do fractional shares investing. So next thing, we have Google as well. Google is also another great stock. Well, not Google itself, but Alphabet will be another stock that you might want to consider in your investing. Now, I know their shares at a record high, but once again, you can get a hold of those if you do invest in fractional shares with them. But for those who are interested, the sales records was due to YouTube helping power the search giant to profit because of the ad revenue that they did wind up getting. And for those who want to, look into an area outside of technology, Crocs is actually very interesting right here. They're no longer ugly. Crocs sales are surging. Why? Because of the pandemic. More and more people are starting to wear them around house. It's comfortable and you don't have to be worried about the shoe looking ugly. And in fact, I think they did come out with a couple of designs who are in fact, a lot trendier and nicer to look at. So if you're looking for a stock that is more accessible, I think they're under $100 right now, $98.98. Yeah, under $100 right now. Crocs is definitely another company for you to check out and maybe add to your stock investment portfolio. So that is pretty much all I have for you today. I know it was quite a lengthy episode, but I wanted to make sure that you got everything from end to end, everything that you needed to know in order to make the best investing decision for you going forward. So hopefully you enjoyed that. While I still have you here, do not forget to check this episode right here. That's going to help you complement everything you just learned today. And until then, I'll see you next time. Take care. Bye-bye.